Facts on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in November 24, 2021, and oil stocks are about to go crazy. Today was a pretty boring day, but the big piece of news, they finally made the announcement to release oil from the strategic reserves, but surprisingly to some people, that led to oil shooting up today, and I don't think it's going to stop. So there's a lot of things going on with it. I want to go over this. I even made a couple of decent sized trades, and given the fact that tomorrow is the holiday, I think it's going to be a little bit slower. I want to focus on a lot of the trades that I made today. I'm going to give you a basic set of the keys. Did you guys see Jerome Powell there? He's with us, baby, another term. But I'm going to go over all of that, but then I really want to just break down my thesis behind this. It could be a play. I would argue to say the play of the year, but I think oil stocks are going to be really, really exciting to trade, and I think we're going to get a lot of trading opportunities. So I got some cool things to share with you, and we came to arm, baby. If you do not learn anything by the end of this video, I will be surprised, because we're going to explain what happened today. So I got that breakdown for you. I got a little mini recap on the day, the plays that we made, and then the plays that we have for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch us come to life. And yes, if most of the stock market isn't going to be there tomorrow, but you're going to be there because you're in a cult and you love the market, then yeah, we are the place to be. And the most important thing you need to do, post or watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, I'm going to give you a real quick recap, and then we're going to get into the oil thesis. We'll go over that SPR release, and that's really what you got today. That was the only real big piece of news. But as far as tomorrow, it is the holiday or the pre-holiday. The market is closed on Thursday, but we've said it all week. The volume is going to be low. And even though the volume hasn't really dropped off too much, it is already still felt a little bit slower here today. So be on the lookout for that, but we are still going to be getting a data dump. So there's going to be the Fed minutes and like 5 other reports, including the GDP and some of the PMIs. So that is going to be key to watch. And then we're going to see what happens with the volume and trading. I mean, small caps will be a key to watch. Ever since the Longeveron James yesterday, there was a lot of biotech activity. But what you saw here today, if you've been noticing, the NASDAQ has been getting absolutely clapped. So there was a nice end of the day run, but it was looking pretty ugly. And even then, I believe the NASDAQ still closed just over 0.5% down. And if you remember yesterday, it dropped another percent. So that was pretty ugly. But at one point in the morning, we were down probably 1.5%, and every index was red. So we had a little bit better, a reverse of yesterday. We kind of melted up into the close. So that was good. But what a lot of people have been noticing, and that's your first pretty picture here, it's a lot of the speculative bets that have been getting sold off. So a lot of people are even saying that a lot of stocks are susceptible to tax loss harvesting at the end of the year, and that is very, very true. You're kind of seeing that, but then you've been watching a certain set of tech stocks sell off. So even in the last 2 days, it's been these companies with the highest valuations relative to what they're earning. So it's not Apple, it's not Amazon. Those are highly valued, but their PEs have came down a lot. It's the ones with really, really big forward sales. So one that was surprising is Asan Derulo got absolutely clapped out there. I didn't really realize it, but from 140 down to 101, and then even Zoom, they had their earnings as well. But a lot of these are the ones that have really been selling, not to mention just a host of other names, the pretty much high beta stocks. So that's pretty much what has been describing the last few days here, at least today and yesterday. And it is the holiday season. So again, we're waiting for that Santa Claus cause rally, and we're going to see how that comes to fruition here next week. But tomorrow will probably be the final real day of setup. Then Thanksgiving holiday, and then Friday, Black Friday, it is a half day. It should be a little bit chiller. So we're going to skip the company news and events because most of today was all about the oil. So I want to give you guys my thesis here and give you really what I'm looking at. The base thesis is that I expect in the next 12 months, oil will either be at the prices that we are at now, or it could be substantially higher. And then if things really do get crazy, I think we might even just see a brand new regime of oil prices, and it could really get nutty. So why do I think that? Because today was the release of the SPR. We finally got the formal announcement. I want to give you some fun facts to really understand it, because even though we got the formal announcement, what has been happening is that we have been talking about this a lot. If you don't even remember, Biden has even brought this up before he was president. When he was campaigning, he's brought this up as a plan. What happened today is they finally announced what they're going to do. They're saying it's in cooperation with other countries, but now the U.S. is going to release about 50 million barrels from their reserves. I believe currently we are at 606 million in the reserves now, so just under 10% of the reserves there. So that's pretty much what you got here today. There is a couple of fun facts, but now what I want to bring it back to is the last time this happened. This is now the largest amount. We've never released this amount in quantity ever. So this is the largest SPR release, but then you've also had it in 2005 and then 2011. And what I just showed you there with the price of oil, that is what is important, because if you take a look here in 2005, you'll notice this little window. There's a window because they start talking about it, then they announce it, and then it finally hits the market. So that's why I'm saying this is going to be a crazy play in the midterm. I'm looking 12 months out, and this is why I'm saying it's going to be good to trade, because there is probably going to be a lot of volatility. However, it is going to happen kind of a little bit delayed, or it's going to happen pretty much in increments. But if you notice here in the windows, what you'll notice is every time they start talking about it, whether it's prior or even during the little red window, you could see in 2011, it moved a little bit prior, but 2005, it was already hitting the peaks. The point is, when they start talking about it, it brings the price down. And this is what a lot of oil analysts have been talking about lately, is that oil has already dropped from 85 to 75, and that is what correlates with them talking about it. So this is already some of the effect being priced into oil. You can't forget that, as well as pricing in whatever supply concerns we had last time with OPEC, and we're going to talk about that. But now I want you to understand the dates here, and then I want you to understand a couple of other things, and this is why the periods and time frames are going to be important. But a lot of people don't realize we have already been selling oil from our reserves this year prior to this announcement. So this is a special release that they're doing, and they've announced it, but it's not as if this is new. And actually in October, we released more oil from our reserves than ever already leading into it. So point is, you've already been getting extra oil on the market, and there's just a lot of things that have already contributed here to this price decline. So even though the release is coming out today, this is why I'm thinking the release is a bullish sign, and we're going to get to that. But essentially, this is now a future plan, and like they even said today, they're trying to do an advanced release, and they said they're going to exchange it with other stuff. But in October and here at the beginning of the month, they were talking, given the ongoing pace of the current SPR release, 12 million barrels a day in the last 2 months, and the biggest weekly rise so far last week at 3.1. It's fair to assume more SPR barrels are going to leave U.S. shores in the weeks ahead. So the point is, they've already kind of been doing this. They're going to do more, but it's not as if it should affect the supply too much. And then take a notice here. This is from the older article. Again, this is a couple weeks ago, or at least 1 week is when it was updated, but this is in reference to what happened in October. But those cargo ships were loaded in the Gulf Coast, and they are headed to Asia. And now that's the next part of this that we're going to talk about. about, this really won't bring the price of oil down because most of the reserves that they're releasing from the U.S. strategic reserves, it is sour crude. So I've never tried. You don't taste it. I don't know how it is. There's different types of crude oil that require a certain process to refine them. I'm not that deep into it, but the point is we don't use that as much here in the United States. It's actually exported to China and India, and thankfully I'm not the only oil person looking at this, and there's a lot of people already talking about it, that most of this oil that's being announced today, even if they do increase the supply, it is not going to be increasing the domestic amount of oil. And this is what makes it more interesting, because that's what people are talking about with gas prices and even looking at the price of crude. Even Elizabeth Warren today is asking the CEOs of all of these oil companies why so much of the fuel is being exported into winter, but she wants them to ensure enough domestic supply. So you can see here, this situation is pretty convoluted and there's a lot going on. And the pure economics is, will this have an effect? Most likely not, because they've already been doing it. And now there's a couple of other things that could counter it. That has to do with OPEC. But here is the point that I'm talking about, and this is the main one in general, is that the fact that they are releasing the SPR and taking these steps and talking how they are, it's pretty much admitting that the problem is big enough to warrant a response. I've talked about this with Fed interest rate cuts. When the Fed finally starts to cut rate, that's them kind of admitting, okay, we got to do something. Essentially, the government would not intervene if there wasn't an issue that would mean there was going to be way higher prices in oil, and that's why you look in 12 months, oil was up after 2005. It did come down a little bit, but then you saw what happened. And then same thing in 2011. It came down a little bit, but they held their prices a lot better up until there was the geopolitics with Russia and everything else, and oil and everything started to go crazy. But the point is, they do not do this often, and they don't want to, because there's a lot of implications. People even ask them today, is now the United States going to step in every time OPEC or anybody has an issue with that? Again, there's just so many implications tied to it, and that's where I'm saying here now for my base thesis with it, is that just in this post-pandemic world, you got the supply chains, all of the demand, the money supply, you got the environmental stuff and green energy and what they're trying to do and all of that stuff. But essentially, I'm saying that oil could go crazy here in the midterm, whether it's the 12 months, and then you saw 2005 to 2008, it got very, very wild. But I'm thinking this could get crazy, because now, depending on how this reserve plays out, essentially our reserves are very big right now. We could start releasing them, but we're kind of doing it early, where oil is already kind of at a decently low price. I mean, it's below the historical median of oil. It is high, but realistically, we've seen oil at these prices and it hasn't been too disturbing. So the point is, if they take big actions now and throw the kitchen sink, and now we don't really see an effect, or it gets worse from here, the question is, will they have to tap it again, and what would that imply? And then now we have yet to hear from OPEC. So today was the first announcement. We'll see what OPEC says, but if they try to squeeze us, this is a new element of escalation we haven't seen between countries in a while. So it could create an interesting scenario, and I'm thinking all of this is bullish for oil. So coming into the plays now, I've put my money where my mouth is on this one, and I did make a couple of plays today, and I want to go over them, and you'll get to see what we're working with here. But I also did have some plays from yesterday that I'm still holding, but the general idea here, I'm looking for oil plays and anything that could be a proxy to oil. So first play is going to be XOM. Obviously, it's because of oil, but the reason why I like them, they're a good proxy to oil. That's the first reason. And then what I found out after hours, in most of the SPR auctions, it's the government who auctions it off, and there's only a couple of approved bidders. Exxon has won a couple of them, so I think they're being in a good position. They actually win most of them. So I decided to make a play this morning, and lately I would have really gone for a flip. I went with way less time than the Phillips play. I got that one out till May. Again, I'm trying to keep a pretty wide timeline here, but I grabbed 5 of the January 67.5 calls for $1.05, and I wanted to kind of flip them. They were up like 20%. I think they even closed up 16% by the end of the day, but now I'm thinking I kind of want to swing it here. I want to see how oil plays out. Again, it is going to be very volatile, but that is the first play I'm going to be holding. And remember, yesterday we grabbed another oil play. That's the May PSXs. This one's a little bit smaller, so I put about like 500 in each of them. This one goes out to May, so I want to swing that, but these These ones were up like 22%, but all of the oil plays pretty much had 30% premium today. And you'll see as we get into the next play, I did decide to go for the USOs, and we'll talk about that. But the main reason why I got the USO was the premium didn't move at all, and that's what I liked about it, and it kind of hurt. Again, that's the good and bad, because if you could buy it when all of the other plays have premium, it's great to get a discount, but that means if everything does move, those plays may not move the same. So that's the good and bad. We'll go over the USO play, but even with the XOM and how I'm playing the time here, you know, with what I'm saying with this whole thesis, think about how I played the Airbnb. We even made a play on Airbnb today, but I played it about 3 or 4 times since their earnings, and that's what I see here with oil. I think pay attention to the premiums. They're going to shoot up. It's going to shoot down. There's going to be some drama. I think the overall trend will be on the upside, but keep that in mind to stay nimble. But now coming into the USO play, I did this one right at close, and this was just after all the reports and getting to hear from it. I was really thinking it's bullish and just watching oil. It sucked that there was so much premium, so I grabbed USO because the premiums barely moved. I think this play at 340 for the 65s for July, I think it was only at a 5% increase from the day before, and then even some orders came in after at a negative play, so essentially you would have got it cheaper. So I only liked it because it covers oil. I think they could go up, and it was just a little bit of premium compared to holding the XOMs, and I was already up about like 20% or so. So that was the second play. I'm holding all of these oil plays. I'm going to see, again, given the fact I think it's going to have a lot of volatility, I'm probably going to make a bigger play once we could get a really good premium discount, and then we'll see what happens coming into 2022. But coming into the final play, I did decide to make another move on Airbnb. I kind of went in for the 4th or 5th time here, but I did take another play, and I'm looking to swing the bounce up until next week. Now, if it does go up like 50%, 80%, I may consider taking profits, but this is what I told you guys at the beginning of the week. If the premiums die down this week, I'm going to use that as an opportunity to set up for a potential Santa Claus end of the year rally. So you guys know how I've been looking at Airbnb, and we talked about this one yesterday, and we even made the average down on the shares. Well, today the premiums finally dropped, and we've played these 220 calls a lot, but last time I bought them was at like 290. Sold them out at like $4 or $5, so they dropped back to 260. That's pretty much a 20% discount, and I think they ended up closing up around there, only 10%. They were up 20% throughout the day, so that 270 to 290 range, I think it's important, but it's not as if I saved too much money. Again, I could have waited and got it better, but what I'm looking for here, I said, okay, it's sold off for a couple days in a row. You also are getting the holiday effect. I figured I'd go in with this play, put in $1,000, and then if I start going down on these and I lose even another 30 or 40% from there, these will be really cheap. Again, you guys see options in some of the plays. If they go against us, be prepared to lose a big amount. That's why I'm already forecasting that. But given how I want to swing Airbnb over the next couple weeks, I'm still liking the move. I think you're just going through the Europe news and some of this little gross sell-off. I think it's kind of more healthier than not, considering what some of the premiums have done. I'm going to want to make another play, and if I'm down on this one, I'm going to look to average down on those April. So you've seen this strategy before. We like the Airbnbs. We're going to ride those out, but those are the main plays. As far as everything else, we did make another trade this morning. I got like a nice 80% flip. I only spent like $260. I brought these Zoom December 170. They shot up. This was the put play, the earnings continuation. I mean, we got it pretty early. I got it within 3 minutes, and I sold out at 223 about like 10 minutes later. I think they even went higher. These went up as high as 3, but kept this one small. Was able to get like a $180 profit off a very small play. So took that one, added to the win. Then we made the XOMs, but decided we're going to swing that. And then I grabbed microns. These were up a lot. They ended up closing down 20%. These are the next week 120 calls for 11 cents. And I was seeing some of the momentum. Micron even did good today. You could see it. Premiums could get double clapped, and I want to see, but I was playing any momentum. If it does come to life either next week or even this week, the point is with the chip makers, if they do come back to life, Micron is the value play. So I may need a double dip with that one. It's going to be a riskier one. And then we got Spotify. I got completely swindled there on the news. There was like a Netflix partnership news. Had a little pop and drop. The initial move looked good. The momentum, I should have known with the holidays. And the news was just not that hot in general. Didn't seem like it'd be that big of an effect. Just a response. I thought the plays looked decent. I grabbed the December 285s for 220. They ended up coming down. They were down like 30 or 40%. You got that little run up there. So we're down 20. That one's going to be volatile. Just going to watch that one out. I think I'll swing it, but we might get totally clapped there. But I still think it's good enough to at least hold to see if it comes back to life. But those were the only other plays. As far as everything else, we're still holding the long Chevron. I'm pretty much going to be watching these oil plays and some of the momentum stocks we've been watching. And if we do get any momentum, long Chevron, they dropped. I think it went up here after hours. So that's good to see. A lot of people ask me about it. I mean, we're still playing this for the reason there, the valuation and the PRV. And again, until the company says anything, I mean, no news is good news. Lost $9,000 of the profit. We still have a $13,000 total gain. And the whole position now is $24,000. Kobe, we'll see what happens with it, but I'm going to be holding this out. I wanted to see if there was a move, and what I'm looking for with Longeveron tomorrow is essentially for it to play out after that first run-up day where it went up 200%. It looks a lot like today where it sold off most of the day, sold off a little in the morning, and then it took off. The short interest on this is absolutely going crazy, so that's the added factor, but at this point, the valuation is still there. I'm just going to hold my shares pretty much until there's a catalyst, until we hear any news on the offering or what's going to happen, or if the fact is no news even coming into the holiday, that could still drive the stock up. So going to be riding that out. If it did drop below like $6, $7 at some of those average down prices, I may be willing to actually get back in. I mean, people ask me that, but for now, all I'm going to do is hold those free shares. We already still got 20,000 bucks in it. We already got the realized money as well too the other day. So just going to see what happens, but that is pretty much it. The only other thing I watched, TLT and the dollar. I mean, I think the dollar chilled out a little bit today, but the bond auction had demand, but things sold off. This is kind of the continued effect from the Powell nomination. Don't forget, this was an event. We'll see what the data says tomorrow, but TLT is already getting juice. I'm going to keep my eye on it because, again, we're waiting to see if there is a break, and that could start to affect things. That may be worrisome, especially with some of the higher multiple stocks. But again, the dollar may give us a little bit more insight into oil and everything going on. But if TLT does keep dropping, that will be an indicator. The question is, do you see that at Thanksgiving, or do we get it next week with a potential rally? So that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, as long as God knows, you good, baby. But the code loves you. I love you. I'm gonna see you in the morning. Let's go.